You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. Hey team, welcome back to That Home Loan Hub. I'm Zibunisa, your no-fluff mortgage mentor. And today we're talking about the whispers that are turning into roars. Interest rate drops might be on the horizon even further. But here's the real question. Are you prepared? Because whether you're current homeowner, first-time buyer, or somewhere in between, what you do now could make or break your next 5 years. So let's start with what's happening out there. The Reserve Bank is holding rates steady for now. The economists are circling that we're going to have maybe another cut for OCR. And looks like inflation is softening, unemployment's ticking up slightly, and the global vibe is shifting to ease, not squeeze. Some banks have already started quietly trimming long-term fixed rates, hinting at what's to come. So even though the cuts haven't hit the headlines fully yet, the forward-thinking buyer is already planning. So why is this a big deal? Look, if you're fixing your loan today for 2 to 3 years, you might miss the window to refix at a better rate when the cuts come. If you're house hunting, you might be able to afford more than you think once those rates dip. And if you're rolling off a high rate fix soon, the relief might be closer than you think. But, and this is important, timing matters. Jumping too soon can cost you in break fees or missed savings. Waiting too long can mean you locked into a rate just before the drop. So let me give you a real example. One of my clients, Sam, fixed in mid-2023 at a rate of 6.99 for 2 years. He is now coming off the fixed rate and he's thinking, should I fix for longer or should I float or should I just fix for short term? Now, we looked at the math. And we looked at what the break fee will be, potential break fee in the future, and if he wants to wait. Now, he can likely refix below 5%, and coming up with the right strategy, whether it's a long-term or short-term, makes the whole difference. So don't be like Sam. Don't just jump at the first available rate available on your app. Go and talk to a mortgage advisor and calculate your options. Because floating could be a good option, but then floating too long can cost you thousands of dollars over the same period. So just to recap, if you're due to refix soon, talk to an advisor before you do anything. And we can look at multiple lenders. We can look at splitting the loans, or we can even float short term to buy you more time. Because remember, the next OCR review is coming up in July, and then the next one after that will be end of August. If you're buying now, consider shorter fixes or split options. Don't lock in high for too long just to feel safe. If you're an investor, this could be your golden window to gear up again. Falling rates sometimes equal higher yields plus rising values. And if you're floating right now, stay close to your advisor. The moment the first bank flinches, we move. So, are the rate drops guaranteed? No. But are they looking more likely by end of the year? Absolutely. And when they do come, the people who win won't be the ones who waited. They'll be the ones who planned ahead. So do you want a review of your current mortgage? Want to build a game plan? You know what to do. Reach out. Thanks for listening to That Home Loan Hub. Hit follow, drop a rating if you loved it, and share this with your future homeowner mates. Until next time, stay smart, stay ready, and stay one step ahead. And that's a wrap on That Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.